international adoption has occurred is at the sovereign level. So there's now 7 countries that are mining Bitcoin using government resources. That number's doubled in the last 18 months. And then the corporate adoption, private and public companies, those holders have tripled their Bitcoin holdings in the last couple of years. MicroStrategy is obviously the poster child, but we count now more than 60 public companies that have added Bitcoin to their balance sheet as a reserve asset. The first Indian company did that this week. So when you compare gold to Bitcoin, what you find is Bitcoin ownership is still dominated by retail. Nearly 60% of the holders of the ownership is retail, and it's underexposed to governments and corporates, and that's where we do expect increased adoption next year, and then hopefully these big wirehouses will put out new models, right? New variations on these 60/40s. But if they don't, that's our opportunity, because VanEck traditionally selling ETF reaction, several foreign countries, notably a legislator in Russia just put forward a bill to establish a Russian strategic reserve of Bitcoin. So, as you've highlighted many times, the game theory of this appears to already have kicked off.
Well, what about the Bitcoin Act? The idea that we might either reprice the gold that we own and then use that to purchase Bitcoin, sell some of our gold to buy Bitcoin. Do you think that's possible?
I think it's possible, but unlikely with the current Congress. We may need one more cycle to, get lawmakers from both parties on board, which is what it takes to get most legislation through Congress.
The gold bugs are so interesting. Sometimes I do shows and it'll be for an investing audience that has a lot of gold bugs, and they are so negative about Bitcoin still. And it's sad to me because I feel like the principles and the values behind gold are so
speculative utility, the way for Americans, developed market investors to get exposure to that asset. It's not really the full utility. And you have to go overseas and talk to some of these regular people. That's how I first got my conviction, was through individual conversations with taxi drivers, basically, who said that they're into this asset. And I was working on Wall Street at the time, and I came back and told the trading desk, and they're like, that's a contrarian indicator. You sell when the taxi driver is bullish. And I didn't take that advice. I thought, this is actually the anti-Fed money. It's not going to be something that is initially blessed from institutions who have a lot to lose. It's going to be a retail asset. So I took the other side of that trade. Thank God.
Wow. Well, and so you're really passionate about the emerging markets. You specifically recently did the report on El Salvador. Can you talk a little bit about that? I've had the chance to visit myself, and I saw actually a mix of two worlds. When you go to Bitcoin Beach in El Zonte, it seemed like everyone was embracing Bitcoin.
So that's where we think that the adoption is most likely. I've been visiting El Salvador for 4 years now, since they adopted Bitcoin as legal tender, and have been pretty impressed at the adoption. So about 8% of El Salvadoran citizens have used Bitcoin for payments.
That seems low.
It seems kind of low, but it's not. I think it's reasonable. For a country where, the average person is making, $10, $20 a day, and they're basically eating what they earn every day. It's not their primary, they're not primarily motivated by savings.
Sure.
And we've done a lot of conversations with taxi drivers, and I heard great optimism about the Bukele administration, about the time when the alternative becomes true. If every company in the world starts issuing convertible bonds and buying Bitcoin with the proceeds, eventually there would be too much supply and the model would flip. But we're still so early in the adoption cycle that for now, these issues are finding strong demand. And when you look at the universe of Bitcoin miners, US listed Bitcoin miners now control about 30% of the total Bitcoin hash rate. That's quite a large number. It's grown up from, say, 20% over the last couple of years because the publicly traded Bitcoin miners have access to cheaper capital than private companies. And one of the ways that they raise that capital, some of it is through share sales, and then some of it is through these convertible debt or other debt issues. So during the bear market, they're just kind of marking their numbers to market and comping these pure play Bitcoin hodlers more closely to MicroStrategy.
Well, I mean, Bitcoin has gone up on average, the CAGR is like 40 to 60%. And if you're conservative, like I've seen some of Michael Saylor's models into the next 21 years, and it's like maybe conservatively, let's expect 20 or so % every single year appreciation. Isn't it just the best strategy for more companies to evaluate putting it on its balance sheet? Because it's very hard for a company to grow at the rate that Bitcoin's growing. And so to have that just supplement the company's valuation, why isn't everyone doing this?
Well, there's a difference between hodling the Bitcoin and issuing debt to buy and add to your Bitcoin position. Anytime you introduce debt, combine debt and Bitcoin, you're really turning up the dial on risk. And when we look at, I think that there's an argument to diversify, and some corporate Bitcoin holdings should be put in self-custody, cold storage, and some into the Bitcoin ETF. The ETFs are clearly very cost effective. I think it's a legitimate strategy, but if you're adopting Bitcoin as your treasury asset and you want to appeal to the community, it's also nice to be able to say you have those coins in cold storage. So MicroStrategy, for example, doesn't hold any of the ETFs.
There are some people who watch this and follow my show who are kind of anti-institution, and they're skeptical of big corporations getting involved. And one thing I noticed when I was looking at your Twitter is you retweeted Roger Ver's interview, which was very much, I think, of the ethos that, hey, we should not trust government. Government is hijacking Bitcoin. And you work for an institution. So I want to get your take because, again, I feel like the audience tends to bifurcate. Some people are very much
Department of Financial Services. It's bankruptcy remote. They're not allowed to lend that Bitcoin, rehypothecate it, anything like that. And that's just the laws of like fiduciary relationships. So for one's own personal stash, I'm all for it, self-custody. Yeah. But once you hire someone else to manage your money, that person can't hold the coins themselves. And that's where the ETF unlocks that entire trillions of dollars of regulated assets.
Got it. Okay. So do you think that self-custody will be protected by government actors, say here in the U.S.?
There are some laws that have been proposed at the state level to protect the right of self-custody. I'm not really sure what that means in practical sense. So I don't ascribe too much importance to it. The laws and regulations around fiduciary relationships are not likely to change. A money manager won't be able to hold their coin. When the funding rate for Bitcoin exceeds 10% for more than a couple months, that tends to be a red light. Yeah. We're only like less than a couple weeks at this moment. And yesterday's washout eliminated that as well. So funding rate's not really flashing red. Unrealized profits, because you can track on the blockchain kind of what everyone's cost basis is. So that is also, we're not seeing scary amounts of unrealized profits. And then like anecdotal evidence of just widespread retail leveraged speculation. That's a little bit more qualitative, but again, not seeing that as well. So we're my base case is something around 180K for next year. And then over the medium term, we think about Bitcoin relative to gold. About 50% of gold is used for industrial or jewelry purposes. Bitcoin they mined if they get tax breaks other ways. So I think there's a way to think about this not in a zero-sum way where we're actually selling gold, but where we're just incentivizing building in the US, specifically of energy infrastructure. And then Bitcoin miners can play a role, monetize some of that energy, and maybe the government can take a piece.
Let's talk a little bit more about energy because the demand is only increasing. We have to find cheap, efficient sources. Nuclear is something that has been talked about more and more. Doesn't Van Eck have a nuclear ETF that you've tweeted about?
Yes. So we have a fund. The ticker is NLR. It's nuclear-oriented ETF. What makes it unique is that instead of just owning the uranium and the uranium miners, as many of our competitors do, we look at the entire ecosystem from the utilities to the companies. And we realize that there are tremendous network effects when it comes to digital platforms, and the margin profiles of the Amazons, the Googles, the FANG stocks. Basically, we were early in those stocks. We had big positions, and we always had it in the back of our mind that these companies would be disrupted at some point. It's either going to be by regulation or by technology. So kind of both of those have come to pass, right? All the big tech companies are facing antitrust suits in the US, in Europe. I think eventually it's going to be open source databases that take margin away from these companies. So Bitcoin, for me, in 2017, when I first started buying, was the killer app 1.0 of this new cryptography technology that had the potential to take margin from centralized institutions like banks and brokers. So I left Kathy in 2011, worked on the sell side at a Hong Kong-based broker dealer, writing research, selling research, but just fell down the crypto rabbit hole after traveling so much in emerging markets and watching how the Web 2 industry